Hello everyone, Sébastien Buur speaking. Thank you very much for taking the time to look at this video, this screen recording. The purpose of this video is to share with you how we work with investors and what our lending offering is. So we work on different ways with investors, could be joint venture, partnership, or it could be on a debt basis, on a borrowing basis, which is what this presentation is all about, the different type of loans and associated elements. So let's have a look. So but before I get into the details, let me tell you a bit more about me. I've done another video more detailed about this, so you may want to have a look at that. So I will whiz through this presentation. I've got a corporate background, having spent 15 years working for large multinational companies in very operational roles, general management, and being a managing director of large business units, 100+ million pounds turnover, and hundreds of people, organizations. So giving me a very strong business focus on the way I do things and run my property business as well. I've been investing in property since 2008, starting in South Africa and in France, where we've lived, and for numerous years and markets we understood and knew very well. And after arriving in the UK, we invested a lot in our education, to understand how not only to do property and invest in property in the UK, but how to do it in a professional way and becoming professional property investors. And been doing very well through the different educational programs, mainly by taking actions and applying the learnings that we were getting. Today, at time of recording of this video, we have a portfolio of 16 properties outside of the UK, between France and South Africa, and in the UK 4 single lets, they're being sold at the moment, and we control 11 co-living houses, house shares, HMOs, habitation of multi-occupancies, as well as a block of serviced apartments. We've done some flips as well, so typically buy a property, add value, and sell it on for a profit, mainly on most of these, no, actually all of these, working with private investors. And we funded all our initial deals with our own funds, making sure we were making the mistakes and getting the learning with our own money, not anybody else, but afterwards working with private investors, which allowed us, of course, a faster growth, as well as building great partnerships and helping others to get great returns on their cash. And this is our current focus. We love the joint venture model, but to do joint venture deals, there are opportunities rather than working with the banks sometimes to work with private investors. You can act as the bank as such, which is a lot more rewarding for us as developers, because we get to meet people, we get to work with people, which is not just a faceless business relationship like with a bank, and we take out the middleman, really, because banks are just people paying very little interest to investors and charging higher interest to borrowers, people like me. So the idea is to take them out. So our offering, when we talk about borrowing, lending, we understand that investors may have cash, or actually SAS pensions, so SAS being a small self-administered scheme when you've taken control of your pension pot as such. And the objective for us is to give the following to the lenders: so of course great returns and profits, as well as gaining learning. Some of our investors actually are not too interested in that, but some are very interested in learning as well as they go along from us and what we do and our experience, and so they can maybe go and do it themselves. And the idea is that you do so doing in a safe way and enjoying it as well, through the relationship we can have together. So how does it work? So let's talk about security first. How the money, the funds are protected. with a loan, and there's a range of options which depends on the structure of the loan, which can be either a first legal charge on a property, so that's really when you are replacing the bank, because that's typically what a bank would do if you go and buy a house or fund a large chunks. It could be a second legal charge on a property, where you rank just behind the bank, and if it is not project specific, maybe it's going to be more of a personal guarantee against our personal portfolio, or on larger projects where we set up a special company, a special purpose vehicle company, which is just a normal limited company, but just dedicated to a specific large project. A good way to secure funding is to offer a certain type of shares into the company to the investors, which give them not always control, but a good security for the funds invested. Different ways to lend. There are 5 main ways that we've got in our offering. One is full private finance. One is what we call deposit funding, development funding, non-specific loan, and underwriting. So let's have a look at each of these so you get a better understanding. So the full private finance is typically where an investor provides most, if not all, of the funds required for a project. It would be larger sums of money because that would be replacing the bank, as I mentioned earlier, usually north of £200,000. And there, of course, the security would be a first legal charge. Basically, you are being the bank and get the same level of security that a bank would get on a project. Typical rates of interest can vary. The range is quite wide, but it's anywhere between 5 and 9% per annum, subject to the project specifics, your situation, the circumstances, and negotiation, of course. But much better than whatever you would get if the money was sitting in the bank. That is for sure in all cases. A second option is to do the deposit funding. So that's typically where we would use a bank to fund most of the purchase of a property, for example, but where the deposit funding needs to come from elsewhere. So that's what we call mezzanine finance. It comes on top and above the bank. It could be smaller amounts, such as 50, 60K. There would be a main lender in place, so that first legal charge would not be available, but depending on the lender, a second charge may be available, or another type of security may be available, and here the interest rates can be higher, anywhere between 8 and 12, again subject to the project specifics, what the project can afford, what can be done, and negotiation. The third possibility, which I've mentioned, is once we've purchased the building, we've got the control over the property, is we need funding for the development. Whatever work is going to be done, whatever building work is going to go on, conversion works, refurbishment, and so on. And this is where the investor provides the funds for the development cost, shorter period of time, more likely, as well as smaller amounts, again starting from £50,000. There would be again a main lender in place, so it would only be, if available, a second charge or another type of security, and again typical rate of interest 8 to 12%. So very similar to the deposit funding. I guess the main difference will be more the time scale on development funding, so it could be shorter period of time, because you don't come in from the purchase of the building. There could be a lot of things happening between the purchase and the development funding, such as the planning applications, preparing the sites, getting quotations for builders, and so on. So similar to development funding, but maybe shorter time scale on the development funding. The fourth one is, on the contrary, very good for people who are looking for a home for their funds for the longer term. Because the challenge with lending money sometimes is you find a good loan, a good lending opportunity. It's for 6 months, 12 months, 18 months, or anywhere around these numbers. But in between, the money comes back to you and doesn't get to work anymore. So you end up having, as such, a void on your return. You need to find another good opportunities, and it's not obvious when the next one is going to be there. And the benefit of a non-specific loan is where we can agree for several years, maybe a lending solution where then the money gets to work all the time, and it can also be then a regular income coming in from this type of lending. So it's not lent to a specific project, but more generically. This said, I will say that to any of these loans done to any of our limited company, would be then used within that limited company to acquire or fund assets owned by that company. So the money just doesn't go in the ether anywhere. There's still a link somewhere, but of course we can roll it from project to project on our side, giving us a bit more flexibility, and on the other hand, that gives you a bit more return, more regular return, and overall a better rate of return without the void and the gaps in between loans. Secured via personal guarantees most of the time, or shares, but personal guarantees is a typical security, and typical rate of interest, again subject to specifics, amounts and duration of the loan, is anywhere between 6 and 10%. And then we've got a fifth solution, which is what we call the underwriting. This is where the investor provides funds to guarantee projects are funded for us, larger sums of money, so we can go out there and buy. We know the funds are lined up while we're busy raising maybe deposit finance or development finance or a private solution, a full private finance solution. So this is larger sum of money. 300k, possible first legal charge, of course, on the asset until it's replaced by another investor. Typical rate of returns 10% on the money utilized, and as long as the money is not utilized, you get 1% on a monthly basis for the money that's committed, as long as it's not returned to you. So we've got the funds available, and we know we can go and acquire a project. Gives us flexibility, higher level of return, and then while we fund, we raise additional funding. So if we look at a summary of these 5 different solutions, number 1, full private finance, first legal charge, usually you're the bank, minimum investment north of £200,000, rate 5 to 9, subject to discussions. The second option is to do the deposit finance, smaller amount of money. So the second legal charge, if allowed by the main lender, and development finance, similar, just a shorter term maybe in terms of duration than deposit finance, with both similar level of return, 8 to 12. The non-specific loan, longer term, ideal, constant return, income generating from 50k upward with no upper limit, 6 to 10% rate of return, and the underwriting 10%, but plus the 1% guaranteed in any case, as long as the money is not used. So that's the highest level of return as such. So I hope this is interesting. I wanted to mention a few testimonials of people that have worked with us, investors that have invested with us. So Vanessa was typically someone who was looking for a bit of an income solution while she was busy going through a transition professionally. She had some spare cash in the bank, not doing much, so we worked a good way to borrow her money and give us a regular income, which she got from that, and with the funds safely returned at the end. Another example of someone who's worked with us on a lending and equity basis, joint venture, Dave Griffin. We did one project, and then a second one, and then a third one, and great relationship we've built there. And then another testimonial from someone you may know, Simon Zucchi, very well known in the property world. I've had the opportunity to work alongside Simon and spend quite a bit of time with him, so it's always great when somebody like him recognizes the good work that we do. You can read these testimonials and more on LinkedIn under the recommendations against my name on my profile. They are there, and I invite you to go and have a look on LinkedIn to check these out. So my real questions to you is, who do you know who could be interested in what we do, gaining learning and getting great return on their money? And if we can be of any further assistance, if you've got any questions of what I've mentioned, I'm whizzing through these because I don't want to take too much of your time. But if you got any questions, please feel free to connect with me, either via email or actually directly on my mobile number you've got there, or any of the social media platform. I am easy to find on the internet. So thank you very much if you made it that far in the presentation, and I hope to hear from you very soon. Thank you very much.